After 4 years of discussions, finally MSCI has announced that it would be including China A shares in the MSCI Emerging Markets Index, which tracks $1.6 trillion worth of assets around the world. But what does it change for global markets and investment opportunities? Karim Chedid joins us now from BlackRock with some more analysis. In terms of the global picture, what does it mean for investors, and indeed investors in China as well as around the world?
So this inclusion decision from MSCI, which, as you say, has been waited for 4 years now, is very significant for the evolution of EM investing, especially in the index world. And what I mean by this is, for foreign investors, China is historically, the part of China that is included in the MSCI EM index had been 8 shares only, which are Chinese shares that are trading offshore. Today, with this inclusion, foreign investors are able, through large indices like MSCI EM, to gain some access, a starting point, it's a small portion, but some access to the domestic A-shares market of China. And then in terms of significance for the macro environment for China, it means that it's a small step, but an important step along the way of the Chinese stock market opening up to foreign investors.
So what's the timetable then from here? Because it doesn't happen immediately, does it?
So no, it doesn't happen immediately. What we saw now in June 2017 is the announcement that MSCI intends to include Chinese A-shares in the MSCI EM index. It will only be effective a year from now, in 2018. And we still don't know whether it will be in one go at the May rebalance of MSCI indices, or whether it will be a two-step approach across May and August of 2018. But what we do know is that by the end of 2018, 73 basis points, so that's 0.73% of MSCI EM, will be China A shares.
And in terms of the number of China A shares, what proportion or percentage of those will be represented in the index?
So if we look at the eligible China A shares universe, because not all of China A shares are being included by MSCI, it is the larger cap companies that are. And if we look at the broader universe of the eligible China A shares, it is 5% that MSCI is including. So they could either include it in one go or in a two-step approach of 2.5 and then 2.5. And that largely depends on how Chinese authorities will treat restrictions on daily trading of their domestic market and on access for foreign investors. So it is expected that the looser this would be, the quicker the inclusion can be implemented.
Which part of the investment industry is sort of going to benefit most from this? So
I think this is significant for the index business, because it means that the MSCI EM index, which has evolved a lot over the years, is becoming more representative of what emerging markets look like today. So if we look at the MSCI EM index as a case study, and we see when it was first created over 2 decades ago, and compare its sector composition and country composition to today, it is a lot more representative today. There are a lot more countries in the index and a lot more sectors. So a couple of decades ago, it was mostly commodities focused. Today, it's more diversified across financials, broader services industries, some commodities still, manufacturing. It's quite representative. The China inclusion now is taking it a step further in this representation, because historically the index only included 8 shares, as I mentioned before. But 8 shares has a bias, because 8 shares are simply the companies in China that can afford to list offshore in addition to their domestic listing, which filters out a lot of companies that are more truly representative of the domestic Chinese economy. So including A shares, which are the domestic stocks that may not have necessarily been able to list offshore, is bringing the China composition of MSCI EM in the world of index investing more China, more representative of China.
So when you say index, of course, you also mean ETFs, into which it comes into that
yes, the term
environment.
includes ETFs and index funds and broad index investing.
One other question has to be out of this. What comes next for the emerging markets index? What other economies or stock markets are available for the MSCI to start investing in outside of China?
So China may have taken all the attention in the announcement this year because it has been included, but actually there were other announcements within the MSCI review. So Saudi Arabia has been added on the potential inclusion list. So this list is basically a list of countries that they are reviewing to decide in the future whether they want to include them or not. And so that's very important because Saudi Arabia is a large stock market. It's the largest in the GCC, in the Gulf Arab countries in terms of market cap. It's very large. It's currently not in MSCI EM. Including it in MSCI EM again will make, I'm going to use the same term again, will make the index more representative of what the EM world looks like today. And also another signpost within Saudi is that we're expecting an IPO of Saudi Aramco in early 2018, which is set to be or expected to be one of the largest IPOs, if not the largest IPO in history globally in markets. So first of all, MSCI EM would evolve further if Saudi Arabia gets included. But second of all, Saudi Arabia itself is going to evolve a lot in the way that the stock market looks, away from just the stocks that are in it today, and to include Aramco, which is probably going to be very large. So very interesting times ahead. The China inclusion announcement is not the end of it.
Good. Okay. All right, Karim, thanks indeed for joining us. Karim Chedid is from BlackRock. They're taking a look at the inclusion of China A shares into the MSCI Emerging Markets Index sometime in 2018.